Did you know that the multifamily real estate sector in Canada is experiencing significant financing challenges, leading investors to adopt creative strategies? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy McKay. Let's get right to it. In a recent article by Mark Hallam, it was highlighted that investors in the United States are getting more creative in building multifamily properties due to economic uncertainties. This was discussed at the National Multifamily Investment Forum, where leaders in the multifamily sector gathered to discuss current challenges and strategies. While the event took place in the United States, the themes resonate with the Canadian market as well. During the forum, Grant Cardone of Cardone Capital and Horatio Jones of Wells Fargo engaged in a fireside chat about raising capital through unconventional means such as cryptocurrency. Cardone suggested that the integration of crypto into real estate could revolutionize the real estate investment trust (REIT) sector. He argues that the current REIT model is broken, pointing to issues like redemptions and cash distributions, causing frustration among pension funds. Another key takeaway from the forum was the sentiment that rental homes will be the most promising asset class in the near future. Cardone noted that young people today who are active on social media show little interest in owning homes. This trend is something Canadian investors should keep an eye on, as it could signal a shift in housing preferences here as well. The forum also included a panel titled National Multifamily Market Outlook, Investor Sentiment for this Red-Hot Market, where Jeff Rosen of MAG Partners pointed out that when capital is constrained, it presents an opportunity for top-tier developers. This perspective is crucial for Ontario-based investors, as it suggests that times of financial constraint can be a chance to make strategic moves in the market. Another panel, The Great Reset, Floating Rate Maturities and Opportunistic Strategies Geared for Generational Wealth, highlighted that new capital is not readily entering the market from wealthy families or individuals. Brian Flax of Meridian Capital Group emphasized that investors are being incredibly selective due to a plethora of deal flow and distress opportunities. This cautious approach is something Canadian investors might find familiar as they navigate similar market conditions. During a networking break, Meredith Marshall of BRP Companies shared her journey in multifamily real estate. She discussed her development projects, including one in Hudson Yards, emphasizing the importance of affordable housing. This is particularly relevant for Canadian cities like Hamilton and Kitchener-Waterloo, where affordability continues to be a pressing issue. The final panel, Following the Capital, Understanding which geographic markets are attracting investments and why, reiterated the importance of distinguishing projects from the market to attract capital. Roy Stillman of Stillman Development International advised that developers should approach market analysis with humility, acknowledging that the market may be smarter than them. This is a valuable lesson for developers in Ontario, as understanding market dynamics is key to successful investment. In a significant development for the multifamily rental sector in Toronto, Choice Renovations Canada has announced a strategic partnership with Fitzrovia, a leading real estate developer in the area. This collaboration aims to transform rental property renovations across the Greater Toronto Area, enhancing tenant experiences through high-impact design and operational precision. Josh Wilson, CEO of Choice Renovations Canada, expressed enthusiasm about the partnership, stating, "We're thrilled to align with Fitzrovia, a company that mirrors our values around quality, accountability, and forward-thinking development." The partnership is set to deliver rapid and high-quality renovations across Fitzrovia's expanding portfolio of purpose-built rental communities, reinforcing both companies' commitment to tenant-centric innovation and long-term asset value. Choice Renovations Canada serves a diverse clientele, including publicly traded companies, hedge funds, real estate investment trusts, and institutional asset managers focused on optimizing their multifamily portfolios. The company is known for balancing speed, quality, and return on investment in every project, from unit turns to common area upgrades. Jordan Alexander King, president and co-founder of Choice Renovations Canada, highlighted the strategic nature of the partnership, saying, "This partnership is more than an operational alignment. It's a strategic leap forward." The collaboration reflects the readiness of both companies to take on larger, more complex mandates from institutional stakeholders. Evan Ungar, another founding partner of Choice Renovations Canada, emphasized the company's role in redefining multifamily renovations at scale. Our systems are built to serve the needs of institutional property owners who value predictability, tenant satisfaction, and fast turnaround times, said Ungar. Fitzrovia, known for its elevated design standards and commitment to community building, complements Choice Renovations Canada's expertise in operational renovation execution. This partnership is poised to meet market demands for efficient and high-yield unit turnover solutions in rapidly growing cities like Toronto. With a shared focus on sustainability, innovation, and long-term value creation, this collaboration between Choice Renovations Canada and Fitzrovia is expected to set new standards in the multifamily sector, particularly in cities experiencing rapid growth and increasing demand for rental housing. In an exciting development for the Canadian real estate market, Starlight Investments has launched a new open-end fund aimed at acquiring multifamily properties in Canada's largest urban centers. The fund, known as the Canadian Core Multifamily Fund, is set to make an initial acquisition of $750 million in purpose-built rental apartments, with an initial equity investment of $415 million from CIBC Asset Management. The fund will focus on newly built and substantially renovated properties in key areas including the Greater Toronto Area, Ontario's Golden Horseshoe region, Greater Vancouver, Greater Victoria, Calgary, Edmonton, Ottawa, Montreal, and Halifax. This marks Starlight's first residential-focused, open-end investment vehicle, and it's expected to attract additional backing from institutional and accredited individual investors through feeder funds managed by CIBC. Eric Belanger, Executive Vice President and Head of CIBC Global Asset Management, highlighted the appeal of private real estate investments, noting that they provide strong diversification and attractive risk-adjusted returns, especially as investors seek alternatives to publicly traded securities. This sentiment resonates with many investors looking for stability and growth in uncertain economic times. Starlight Investments, based in Toronto, is a major player in the real estate sector with $30 billion in assets under management. Their new fund underscores the ongoing demand for multifamily housing in Canada's urban markets, and the strategic partnership with CIBC Asset Management is set to enhance their capacity to deliver high-quality residential spaces. This initiative by Starlight Investments is a testament to the resilience and adaptability of the real estate market in Canada, particularly in the multifamily sector. As the demand for rental housing continues to grow, strategic investments like these are crucial in addressing housing needs while also providing substantial opportunities for investors. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy McKay. See you on the next one.